Good morning, everybody. It is Monday morning. We're here once again on a Monday, May 20th, 8:46 a.m. Back again for another market open. It's Monday. Back to the start of a week and a grind of a week. We are 11 days away from June, which is the half point month of the year. Again, insane to think we're getting into June. And then we'll have 6 months left of 2024, but that's what's happening. And we're back again starting another week in the markets. Now, a lot of stuff that's going on today, a lot of stuff that's going on this week. Obviously, the biggest news of the week in terms of what's going down, Nvidia earnings will be live on Wednesday, May 22nd. So 2 days from now. I think Jensen Huang is doing a talk with Bloomberg today around 1 or 2 p.m. And then Wednesday, we're going to be talking about what happens on earnings after hours. It's going to be pretty intense. Today we have Zoom after hours, but Nvidia on Wednesday is going to be a big deal. On top of Nvidia being a big deal, which I thought was, the largest story at least of the morning, I wake up and we get some news that Mike Wilson, some of you may know him, some of you may not know him. He's one of the top 5 respected names in equity strategy and really macroeconomic analysis. From Morgan Stanley, he just turned bullish. We're going to get deep into why he turned bullish, what his price target is on the S&P 500, how he basically was bearish and calling for a cataclysmic economic recession for the past 2.5 years. And now he has switched up his tone and sort of what that means if that type of a bear is capitulating. On top of that, we got a bunch of other stories. Bitcoin, 67,000. Iran's president has been killed in a helicopter crash. There is a lot to discuss around that. So we got a lot to talk about in terms of how that affects geopolitical movements. Gold is closer to an all-time high. A lot of stuff to talk about. We'll get into all of that. Thank you, everybody, for being here. Brian Chen, Ian, Hector, Nikita, Zocold, Catholic King, Katie, I'm Beneficial, Super Reynold, Marvin, Mike. What's up? Troy, Mario, Chris Amos, Eric Woods, Stevie Stone, Gerald. If Chris was here, he would correct you on Iran. Yeah, it's Iran, whatever, man. The point is, that's a big story over this weekend, and we got a lot to talk about on that. Farshot, Sweden, what's up? Oriello, D, Visual Arts, June, Regcheck, Sherry, G-Trix, Jeremy, what's up? Justin, Nicholas. All right, let's get into the markets. I think the first thing we'll start off with is this Iran news, because this was pretty big news. So let's talk about that real quick, and we'll get that out of the way, and then we'll get on to Mike Wilson turning bullish, and we'll go into a lot of macro updates. So this is also part of the macro to an extent, but it's a bit more geopolitical. Iran's president has died. So let me pull up real quick one slide, and then I'm going to play a quick video of who this guy was. So his name, and I'll probably say it wrong, is Ibrahim Raisi. He was the 8th president of Iran. Now, he's not the supreme leader. He's the guy who's supposed to carry out the policies of the supreme leader. He was one of 9 people that was listed in 2019, subjected to sanctions by the U.S. State Department of human rights abuses. We know that Iran has had some pretty intense human rights abuses. And during his term, he was able to intensify uranium enrichment. Why does that matter? Because Iran wanted a nuclear weapon, and no one in the world wants Iran to have a nuclear weapon. He hindered international inspections. He supported Russia in their invasion of Ukraine. And additionally, we saw this a month ago, he launched a missile and drone attack on Israel during the Gaza conflict and continued arming proxy groups like Hezbollah and the Houthi movement. We saw all of that happening in the Red Sea a couple months ago as well. Here's an update on that, and then we'll keep going from there.
And breaking overnight, as Joe mentioned, Iran's president and foreign minister were killed in a helicopter crash. We want to get right to NBC's Richard Engel with more on what this means. Richard, good morning.
Good morning. We just got confirmation in the last several hours, quite a few hours after this helicopter crash, that in fact the helicopter carrying the president of Iran, President Raisi, the foreign minister, other officials, crashed, that there was a search and rescue operation. They located the debris. They did not find any survivors. The crash took place in a mountainous area, dense forests. This delegation, 3 helicopters, only one went down carrying the president. After he left the border area between Iran and Azerbaijan, they were heading toward Tabriz. Very foggy conditions. Israel has said it did not carry it out. I've spoken with U.S. military officials who say they believe the cause was foul weather. Iran, while there's been lots on social media, lots of speculation, Iran isn't pointing its fingers officially at Israel or the United States. But this does create quite a few leadership issues, a potential succession crisis for the supreme leader in Iran, because the president in Iran doesn't call the shots. He carries out the policy of the supreme leader. And President Raisi was, it's not exactly tapped. It's much more hidden politics in Iran. But he was seen as the clear front runner to become the next supreme leader of the country, considering the current Ayatollah is 85 years old, not doing well. Raisi, now passed away, 63 years old. So this is a major change of course. If he had become the next supreme leader, and he was on track to do that, he could have been ruling Iran for the next 2 decades. Now, on a practical terms, they have to find a new president. According to the Constitution, the vice president takes over. They're supposed to have elections within 50 days. That shouldn't be a main issue for them. The larger issue is what to do about the supreme leader.
Now, a couple of things on this. First, from an economic perspective, gold is inching up there again because of this news. Again, geopolitical instability. We'll talk about Faraday future in a second. It's up 100% in the pre-markets. We'll discuss that. But gold, 223.40 right now. 226 is the all-time high. We can see Bitcoin right here, just under 67,000. I think, the gold's going up a little bit because Middle Eastern tensions tend to mean you want to get some stability. The thing about this from a Middle Eastern tensions perspective is that it's not creating a ton of tensions geopolitically, because Iran is not blaming anyone for this. I mean, so this was apparently legitimately a helicopter crash. It was foggy weather. He was in a helicopter with I'm not sure exactly how many more people, but there were other people on the helicopter, and it crashed in the mountains in Iran. And it's just like that. It kind of just happened. Now that's, one could argue, Amit, you're being too naive. There's definitely some foul play here, and maybe I am. But Iran has not blamed the United States. They've not blamed Israel, at least not yet. Maybe they're going to do it, but it's been 24 hours and they have yet to blame anybody. It seems like this was a crash. And so from that perspective, I don't think the markets are pricing in, Israel carried out this assassination or attack, or maybe it wasn't even an assassination. And as a result of that, we don't need to be worried about a proxy war breaking out or something of that nature, which should affect equities. And so we're seeing, not too much volatility there. Futures last night, when the news was confirmed at around 10:50 p.m., futures stayed the same. I mean, futures were green, and when the markets opened for futures at 6 p.m., they did not change now either. Oil prices as well are down a little bit, and you would expect oil prices to spike up if there's instability in Iran, something like entire leadership change. But no, oil prices are down. Iran, obviously a major oil producer. Still, the market does not feel that this death is massive for the broader economic landscape. Now, in terms of who this guy was as a person, not that many people liked him. Let's just say that. He was someone who's carrying out particular laws that were governed more by the Islamic faith in Iran, not just, a democratic republic. And as a result of that, I mean, what I saw on Twitter yesterday is many people were happy that he was not in power anymore. The contrary side to this is that the guy they're going to replace him with doesn't seem like he's that much friendlier when it comes to human rights abuses. So some people are mixed. Some people are very sad. There was some movements in Iran, like there's a pro-free speech progressivism movement that's happening in Iran. And it's not progressivism like it is in the United States, like tax the rich till they die, which is idiotic progressivism in the United States, in my opinion. What's happening in Iran is like, hey, can we talk freely? Is that okay? Can we say stuff without our heads being chopped off? That's what's happening in Iran right now. And so this guy was not tolerating that shit. And so a lot of in Berkeley, there were a lot of Iranian protesters that were basically advocating for a regime change in Iran that would be more progressive. I don't know if that's going to happen. At this point, these governments are kind of stuck in their ways, and it's going to be hard to imagine them changing. But that is the news that happened over the weekend, and I guess we'll see what instability comes as a result of this helicopter crash. And that's what we had. All right, so that was the Iran news. Let's move on to something that's, I woke up this morning, I didn't expect this, and this is what we got. Morgan Stanley's Mike Wilson is now bullish. So if you guys don't know Mike Wilson, this was the guy back in October of 2022 who was calling for the market to crash dramatically. Now, granted, by October 2022, the market had already crashed. People forget we bottomed in October 2022. That was at 3,600. He was saying we've got a lot more downside to go. In 2023, by January, that's when Tesla was $100, Palantir was $6, et cetera. Nvidia was like, I think, $200. Things started changing. We saw ChatGPT go mainstream. We saw inflation, not significantly go down until the end of the summer in 2023, but it did start to show some positive signs. He ignored all of that. Today, Morgan Stanley's Mike Wilson now sees the S&P 500 rising 2% by June 2025, a major turn from his view that the benchmark will tumble 15% by December. He thought the S&P would go to 4,500 in December of 2024. Today, he's saying by June of 2025, the S&P will be 5,400. This is just this is why you have to be, so cautious when you listen to analysts. Now, to Mike Wilson's credit, this guy is universally respected for the past 20 years across Morgan Stanley. This is the guy that is in the equity strategy, you could call it Hall of Fame, which is why in 2023, when he said S&P, it will collapse, markets will collapse, people are like, what's his reasoning? His main reasoning was inflation and earnings growth not being able to keep up. He thought the forward earnings on the S&P were just too high and inflation was going to be too strong. He was wrong on both of those, right? And so, people really respected him. A lot of institutional money respected him, which is why a lot of people stayed on the sidelines in 2023. He says, in the U.S., we forecast robust EPS growth alongside modest multiple compression. And then he also said, let me pull up this quote as well that I tweeted. He also said, it doesn't matter what we think, but what the market thinks. And it's clear that last week's data has given the markets more confidence in the soft landing Goldilocks outcome. And as a result of that, I mean, yeah, you kind of can't say 4,500 is happening when you look at earnings growth and when you look at inflation coming down. It's likely just not going to happen from that perspective. And so Deutsche Bank also increased their year-end price targets to 5,500 from 5,100. And now Mike Wilson believes that we are going to see close to 5,400. Now the S&P is already at 530. And that's the crazy part about this. This is why I have so much respect for people like Tom Lee. Adrian, good morning. Thank you for being here. I respect people that go out on a limb, that are against the crowd. I think all of us, right, have this inherent respect for people that do this, and they make a call in the face of people telling them they're wrong, and a lot of times cursing them out, quite frankly. And they just say, hey, look at the data that we're looking at. This data gives us an indication. We might be wrong, but this data right here is how we're coming to a conclusion. I guess around Mike Wilson, they were looking at the wrong types of data. And this is why people like Tom Lee get a good rap and are starting to build their brand, because they're looking at data that makes more sense at the end of the day. S&P is right here at 529. Tom Lee, when the S&P was 4,200, was saying we can go to 4,800. Now he's saying we can probably go to 6,000. At the beginning of the year, he said, I think 5,500 is possible. This guy is saying S&P to 5,400. We're already at 5,300. The time to say that was, 8 months ago, not right now. So it's good to see the price target change, but it does, it does bring into question what was happening over the past 8 months that led you to see that was not going to happen. And again, I think what he got wrong were inflation expectations. It's fascinating to me that Tom Lee can look at data that's like public and accessible to anyone. I mean, Trueflation, for goodness sakes, is real-time aggregated data. But some of the top equity strategists in the world, like Cantor Fitzgerald as well, this is a firm that has had a bearish view for a long time now. They have this weird narrative that like, no, inflation's stickier. I'm like, dude, we went through about 18 months of very sticky inflation. We raised rates from 0 to 5.25 in like 10 months. like we dealt with very tough inflation. I feel like all the bears also forget in 2022, shit hit the fan, dude. Like Palantir was $5.96 at one point. Like things went down. We went through that pain. Could we see more pain? Sure. But the idea that we didn't have a really tough, Meta went to $88 from 400. Like things were bad. And so the idea that things need to get that bad again, when there's no real external reason outside of macro, which is starting to get better, or earnings growth, which we have seen has done phenomenal, it's hard to imagine that things need to be as bad as the bears say they need to be. Here's Tom Lee on Friday night and what he felt the S&P did as we got to 530 all-time highs, and what happened in April that caused a little bit of a dip to eventually get to the S&P where it is today.
With AI set to dominate and be the theme in the market for the next few days, could your money be at risk if Nvidia pulls up lame? Let's talk about it with our friend Tom Lee, FundStrat Managing Partner and Head of Research, CNBC contributor, and a guy that remained resolute and strong and long even when things were looking shaky a couple of weeks ago. Tom, maybe what did you see that others missed?
Well, we're talking about why markets recovered. To us, the April wobble was really a market overreaction to a string of some inflationary data and then a fear that the Fed was going to turn hawkish and potentially raise rates. I think that is pessimism really pushed to the extreme at a time when I didn't think markets were exhausted, that a top wasn't in place. So to me, it was a healthy pullback, but it's been important to buy in May. I mean, the market's up 6% since then, and there's still $6 trillion of cash on the sidelines. And investors actually been pulling money out of stocks the last 2 weeks as well.
Did we overstate the importance of just one company, Nvidia?
We did not, because as you sort of set up, Nvidia is really one of the most important companies today because they are supplying a key piece of what is powering all of this innovation in AI. I mean, everything else is really tagging along with actually the value creation because of NVIDIA chips. So it's an important company and an important week.
NVIDIA on Wednesday. If they come in a little weak, the stock's been weak. So it seems like the market is ratcheting down some of the expectations. So give us the scenarios, Tom, if NVIDIA meets or, misses or meets or has a giant beat. What do you think is the implication for the macro market?
Well, it's going to obviously be a disappointment and a negative shock if NVIDIA misses expectations. And, they are very lofty expectations. I would think investors are going to be nervous, but ultimately it would be I think a prelude to a market broadening because investors who own a lot of NVIDIA might want to look for other stocks that are starting to show promise. If NVIDIA beats expectations, because I'm assuming you're going to ask me that, I think it's going to pull money off the sidelines. And I think, again, it probably helps propel a broadening of this market rally. I mean, I think there have been other groups starting to participate, like energy materials this week.
Yeah.
But it would be better to see a beat than a miss.
Yeah, I feel like energy, you look at stocks like a Vistra. I'm not asking you to go into individual names, but a lot of these energy-related stocks have soared because of AI, because they know that the demand for power, literally electricity, is going to soar so high if we actually do complete all these data centers that NVIDIA is helping to, the chips to power all the AI revolution kind of runs through energy. What else, though, besides NVIDIA, Tom, right now? I'm sure the Federal Reserve is on this list. What else matters most to you and Mark Newton and your team at Fundstrat for the macro market?
Well, we're, next week there is quite a lot of Fed speak, including Powell speaking on Sunday, but it's a commencement speech. And there is some macro. I don't think it's going to be as central as NVIDIA, but, we have the FOMC minutes on Wednesday. And I think the other AI event next week is really Microsoft, because they have something related to Surface on Monday, and then they have the 3-day conference bill starting Tuesday. So it really brings a lot of AI into focus. I actually think a lot of smaller supporting and ancillary like edge companies that do AI are going to do well next week because of those events.
So that transitions us into NVIDIA. And obviously right there, Tom Lee basically saying, hey, April's dip was a buy the dip. And the reason he's been constantly saying buy the dip is because he's looking at data that says inflation is going down, earnings are going up, which means the market kind of doesn't have anywhere else to put their money to collect yield, outside of money market fund. But when you see companies start to do well, like NVIDIA, that are doing much more than 5%, the market wants to start allocating capital there. And so that's kind of his macro perspective. Now let's get into NVIDIA. The street is expecting $22.8 billion from NVIDIA. Okay. Can they put up 22.8? Most of the analysts are actually not expecting 22.8. They are expecting somewhere closer to 26 billion. And so there are at least 24 to 26 million is what I was seeing, which would be like a reasonable beat for NVIDIA. Now, obviously, if NVIDIA comes into 22.8, that's going to be amazing. But at this point, given the run from the stock, not the valuation. The valuation's only at a 38 PE. It's actually one of the cheapest. I think it is the cheapest out of the Mag 7, just given the growth is so strong that it justifies a lower PE than most, and a lower forward PE than a lot of the other Mag 7 stocks. But I think psychologically this sucker has run so much that it's a bit more difficult to get the market to be excited to keep it running unless you have phenomenal earnings. So we got a couple price target increases today. Stifel raised their price target from $910 to $1,085 for Nvidia. Barclays raised their price target from $850 to $1,100 for Nvidia. And so we're seeing a variety of firms come out and say, actually, no, we're getting, pretty excited that there is going to be more momentum in Nvidia. And I think a lot of that comes down to how much of the other macro factors are going on, whether it's Taiwan Semi having their month-over-month sales start to increase in the month of April, whether it's GPT-5 getting ready to be on the horizon, GPT-4o, we saw a fantastic model. I can only imagine how much training they had to do on NVIDIA chips. The H200 was hand-delivered from Jensen Huang to Sam Altman. These models are only getting more expansive. We talked about it yesterday or on the Friday show that on Credit Karma, there's a chatbot now. So you got Credit Karma that has to train their models or at least pay OpenAI, which means OpenAI has to use more of NVIDIA's GPUs to be able to deploy chat models into Credit Karma, which is an app I never thought would have like a chatbot inside of it. So many different factions of our society are starting to see that NVIDIA is the only game in town. And it seems like that's why NVIDIA earnings probably are not going to disappoint. Here's a model I want to show you guys real quick. I think I brought it up before. Yeah, here we go. This is the model. So Loop Capital is the most bullish on the street for NVIDIA. They're expecting by 2026, $175 billion in overall revenue. Now, in 2025, the consensus analyst is that, or sorry, 2026, the consensus analyst is 109 billion. And 2025, it's about 95 billion. They think 132 billion could happen. So if NVIDIA grows to 175 billion by 2026, data center revenue would be about 159 out of that 175 billion. And that means data center revenue would be 91% of their revenue. The question simply becomes, if you're as bullish as Loop Capital, do you believe data center revenue has the potential to be that high? And given everything we talked about in regards to all the companies that need something like NVIDIA chips or GPU processing, seems like data center revenue is not slowing anytime soon. So Loop Capital basically expects they're going to be doing $40 earnings per share. I think by the end of the year, the street is expecting somewhere close to like $15 per share at 2024, which means Loop Capital is a 61% delta from the rest of the street. This would put the price target closer to around $2,000 if it gets there. It's going to be interesting. It's going to be interesting to see what happens. We're going to be live on Wednesday after hours and see what happens with NVIDIA. I think personally their earnings are going to be pretty strong. It's very hard for me to imagine what they do that gets the street upset. Now, the street could get upset maybe because certain numbers don't look as good as they want to see, but to legitimately assume that NVIDIA does not have the demand or the capacity to service the demand, which would be a good problem, by the way, if that's the case. We saw Taiwan Semi dumped like 15% because they didn't have the capacity to service the demand. They're right back up to those levels because the street's like, wait a second, they have the demand. They'll figure out the supply stuff, but it's better to have the demand than not have the demand. And then the argument that a lot of the bears made over the past couple of years, first of all, there's two arguments. Some of the bears are saying NVIDIA's cooking their books. I think those people are just idiots, dude. NVIDIA's not cooking their books. You can make a lot of arguments against NVIDIA. You can't say NVIDIA's cooking their books. And the premise of this argument, which goes into the second point the bears that are super bearish on NVIDIA have, is that they're pulling forward so much revenue that there's no way that's sustainable. I'm sympathetic to that argument, but then I'm looking at my Credit Karma app that's now in some way using NVIDIA GPUs. And it's like, oh, and Sora hasn't even gone mainstream yet. Sora, that thing where you type in girl on a horse and then a girl on a horse pops up. Yeah, that's going to be using a lot of GPU power. And so from this perspective, it's just hard to see the innovations we're getting throughout the world, just in our real lives, and not imagine that NVIDIA benefits off of that. And as a result, I think NVIDIA is going to have a fun earnings. It's going to be cool. Jensen's going to be a rock star again. They're going to say that they're only growing, that their demand's only getting better. Now, if they lower guidance in Q2 or in Q3, Q4, that would be, I guess, a bit concerning to the markets. But if by chance they raise or they come in line with expectations, I think they sustain the valuation. We know the PE, like if NVIDIA right here, NVIDIA is what 937, PE of 37. If they grow, what they're projected to grow, that PE comes down if the stock doesn't go up. You know, so you could, I mean, could you imagine buying Nvidia at a 29 PE, where in comparison, you could buy Apple, which is not growing at all, for a 29.53 PE. It's like, who's going to get the capital? You know, it's probably going to be a company like Nvidia. Investors are expecting a 10% move, either to the upside or downside. So the implied volatility is pretty strong as well for Nvidia. All right, so that's the update on Nvidia. Meme stocks. Let's go to these. A Faraday future is once again up 89% in the pre-markets. The thesis on Faraday future that I've been starting to understand, if you want to call it a thesis, is that they could get delisted if their stock is not over $1 in the next 12 days. And as a result of that, there is an army of people on the internet making sure that they keep the stock over $1 so that they don't get delisted. And the idea is the shorts would have to cover if the stock stays listed on the stock exchange. It's not a horrible thesis. I think it's a tough thesis to deal with. I mean, the stock fell 37% in the last like 10 minutes of the trading day on Friday. Now it's back here. Again, it's $2, so there's going to be a lot of money pummeling into this because it's only $2. People think it's relatively cheap. Market cap right now, 43.95 million. It's not cheap if you actually go into the financials, but for a couple bucks, it feels cheap. I don't know where this one goes. And the reason I don't know where this one goes is because GameStop, it was up yesterday in the pre-market, or in the Robinhood after hours, is up 10%. Now it's down 1.13%. AMC, all basically flat on the day, really not seeing the momentum. Roaring Kitty has not tweeted. People have now took the Roaring Kitty videos that he tweeted over the weekend, or over the past week, and they're starting to play them in reverse. And they're trying to create an argument for why, like he was actually telling a story from reverse. Like, people are spending a lot of time on this shit. I did not watch those videos because I kind of value my life a little bit more. And so I don't think Roaring Kitty is trying to say anything. I think this guy is just like putting out random shit to put out random shit. We're going to see today if he starts tweeting. Also, the last thing he tweeted was E.T. from that movie, leaving the alien, leaving the kid and going back to like Alien World. I never watched E.T., by the way, so you go ahead, make fun of me in the car. I never watched it. But some people are saying, oh, he's gone. He's leaving because now he tweeted that like E.T. is going home. And so that's kind of like him like hibernating for the next 3 years. I guess we'll see if that happens, if that's actually his last tweet ever. But if that's the case, dude, then the savior of the GameStop era might not exist. So I hope that he actually tweets. I actually really hope that he tweets and he keeps this rally going, because again, it's fun. It also benefits Robinhood. We'll talk about Robinhood in a bit. Robinhood right now, $19.86. It closed above $20 on Friday. We'll talk more about them in a second. If we can hold $19, that's all I want. Holding 19, I would be happy, quite frankly, because 19 is a level of support that if we can turn that into support and we don't have to go into the 16, 17s to kind of retest those levels, I would be pretty happy. So let's see what happens. Obviously, Friday was a great day, up 12%. We'll talk more about them, but yeah, it would help Robinhood even more, right? If GameStop keeps continuing, but I don't know if that's necessarily going to be the case. And so we'll see. We'll see what happens, but that's what we got right there in the context of the meme stocks and Nvidia. Bitcoin right here, 67,000. We'll talk about Bitcoin in a second. Here's a fun video because I saw someone mention in the chat that I want to show. So my, not literally my grandfather, but you could call him my grandfather. In India, we call him Mamaji. So it's essentially my grandfather. I think that's the easiest way I can explain it. He came over for lunch on Sunday, and he told me something that I couldn't believe, dude. I'm going to just play the video, and then I'll tell you guys the background story about this. But this just shows you how powerful this strategy is. So here we go. Here's the video over the weekend, and then we'll talk about it. All right, guys. So I'm here with basically my grandfather here, who came over for dinner. Say hello.
Hello.
And he just told me, I didn't know this. He just told me, how much are you making a week in premiums from option selling?
More than $2,500.
By selling puts.
Selling puts only.
That's and how long have you been doing this?
Doing for the last 4 years. Before when COVID started, 2020, I have no knowledge of call and put at all. I learned step by step, build my own strategy, and now I have earned good premium and it's a good income for me in my retirement age.
You gotta love it. This is amazing. This is great. Dude, this was crazy to figure out. So the backstory on this is a year ago, he came over for dinner and he was telling me about like puts and calls and premiums. And I was getting into the market but I had no idea you could like sell options, collect premium, put up collateral. I only understood options from the buy the option, and then potentially if the stock gets there, you have an alpha leveraged exposure to your options contract, right? Or to the underlying asset. So I never thought of it from the sell side. So he told me about this a year ago, but I didn't really like take it seriously or like even understand what he was saying. Since a year ago, everything has changed. That, you know, I do this pretty interesting podcast with TJ where we're literally wheeling live, right? Like, and I'm giving him suggestions on how to wheel certain stocks. So like literally everything has changed in the past year. I don't want to say I fully learned it, but I'm getting to the point where I understand at a pretty high level what it means to wheel stocks. At a granular level, need to get better, but at a sort of macro level, I understand cash good puts, covered calls, etc. This dude, since 2020, he learned from YouTube and his son's father-in-law. So his son's father-in-law taught him in 2020, given the pandemic happened and all the stuff, how to wheel options. And he's making $2,500 a week. Now people are like, oh, he's lying because, dude, he's almost 84, 85. He's made a lot of money in his life. Okay. He came from America, from India. He's multiple properties. Like he's lived a very full life, right? So he has a lot of money he's playing with. He's not playing with a couple $100,000, right? So given he has that much money, it's not that crazy to get $10,000 a month, $8,000 a month in premium when you're playing with a lot of money. On top of that, he's raked in over $1 million. He said the exact amount was $1,123,000 since August 2020. Playing in the markets. Now, granted, he's had his fair share of losses as well. He's lost money on Clover. He's lost money on Wish. And we're talking about like $300,000 in losses, right? So like if you're going to make big money, you're going to also have big losses because you're playing with a lot of collateral. So he's lost tons of money in the market as well. But the point is now it's become to the point where he understands put selling so well that it's a legit business for him. On top of that, you know, the market's been bullish over the past 2 years. So obviously he's done very well. Everyone has done well. If you're selling puts and the market keeps going higher, you don't get assigned those puts. So you just keep collecting that premium. If we have a bear market, you know, he's probably not making $2,500 a week. But the point is he is right now, which is crazy. What are the stocks he's working with? The S&P 500, Apple, Google, and then Starbucks. He just got assigned a shit ton of Starbucks at like $80. He was like, dude, how the fuck did Starbucks fall 15% on their earnings? I was like, yeah, it didn't go that well. He doesn't really go so deep into the stocks. He goes more deep into the strategy. So if he's doing, you know, DD on Google or Apple, first of all, it's Google and Apple. You don't need to do that much due diligence on Google and Apple, right? Like you need to know about them, but they're blue chip stocks, S&P 500 as well. It's not, you know, that much due diligence. He got messed up in 2021 picking all these stupid stocks like Clover and Wish, right? That's where he lost a lot of money, learned a lot of lessons, and then just moved on to blue chip stocks. And then when you're reeling blue chip stocks, the premium might not be that good, but his strategy, for those that are concerned about his strategy, there's two things. Number one, he sells the puts far out into the future. So like January 2026. So your capital is tied up for 2 years, but you get paid almost 20% when you go that far into the future. When you go a week out, you know, you're lucky if you make 1 or 2%. Usually in a month, you get 1 or 2%. In a week, you get like 0.5, 0.7%. So if you go 2 years out and you're okay with that capital being gone for 2 years and you have a lot of capital like he does, you can make some serious money on that. Number two, he picks strikes that are obscenely low. So like he'll pick like a $50 strike on Starbucks or something, right? Or like, or something, metaphorically, he'll pick a strike that's very low compared to the relative price. So it's just hard for him to get assigned. Like on American Airlines, he has puts for like $1 or something. And he got paid a very small amount of premium, but still like American Airlines is probably not going to $1, right? So it was pretty cool. And I think I'm going to do a podcast with him in a week or a month going into June. And I want to ask him more questions and get a strategy. The other thing is he's super like, he loves being the center of attention. He was at my graduation. He like sang a song. So like he had no problem doing the video. He loves the attention, I guess, and like being out there. He's one of those guys where he's the life of the party. Now, this is a good question. Does he use Robinhood? Interestingly enough, no. So he signed up for Robinhood. He put $100,000 in there and he was like, I couldn't figure out how to use it. He uses Vanguard. And so I told him, I'm going to come to your house in a month and like, I'm going to teach you how to use Robinhood because they're going to give the 1% match. And I'm like, even if you bring a couple $100,000, like getting 1% is big money on that. And I think it's easy to use Robinhood. So I want to actually see like what it feels like for him as he's trying to navigate the options interface on how to use it. Because for me, it's one of the easiest things ever. But again, older mindset, older generation, it's just a different application for him. Maybe it's like not as intuitive. So he actually doesn't use Robinhood, but I'm going to show him how to use Robinhood and maybe he'll get a decent amount of money on that 1% match as well. So it'll be pretty cool. It'll be pretty cool. But the fact is, option selling is a real thing. And it was so funny that he came over to the house and he started saying this because we started talking about this on the dinner table. No, my mom, my sister, my aunt, my dad, no one knew what we were talking about. And like we were like, just like, you know, it's like imagine a table, everyone's eating, and then it's you and your grandpa just talking about like premiums and option selling and like call debit spreads and stuff like that. And everyone's so confused. And I'm happy he did it because I've been trying to tell my parents, like, no, there's like real value in option selling. And like, I've been trying to explain it to them, but they just don't understand it. But now if he's like, hey, I'm like making money here, there's like a real business, you know, it gives them a little bit more clarity that it's not just their son going crazy over selling options. But yeah, that was pretty cool to see as well. And we'll get a podcast with him probably in like a month. Okay, what else do we have? So Hims, what is Hims doing? Hims is, wow, why is Hims up 8%? What's going on with Hims? What is going on with Hims? Does anyone have any update on what's going on with Hims? Let's see. Hims. Interesting. That's weird. 8% is a lot for Hims. Oh, hold on. I just got it. Here we go. Hims announces access to GLP-1 injections, passing cost savings on to customers. There you go. Hims today announced the addition of GLP-1 injections to its comprehensive weight loss portfolio, giving customers an affordable way to consistently access safe, high-quality weight treatment. Okay, I might be dumb here, but GLP-1 is Ozempic, right? Or am I wrong on that? I feel like that's just the name for Ozempic medically. Let me know if I'm wrong. I might be wrong on that, but I feel like they're just providing. Oh, it is. Yeah, here we go. Ozempic. Here it is. It's in the press release, right? So providing access to compounded GLPs means eligible customers can use the same active ingredient as Ozempic without navigating the shortages and costs that are currently limited access to branded medications. So it's kind of like a white label version of Ozempic's. Andrew Dundum, CEO, says the core of our business is to offer a truly personalized experience that customers can trust and rely on. We've leveraged our size and scale to secure access to one of the high quality supplies of compounded GLP-1 injections available today. We're passing that access and valuable value along to our customers. This is so interesting, dude. America's fascination with this weight loss drug is fascinating to me. I mean, on one hand, it's great for the drug companies. And if I was a stockholder in Eli Lilly or Hims, I would be super excited about this. But also I'm just like, damn, why aren't people just working out? Like, why can't people? I mean, like, I know there are certain people that are so obese, like they need medication, but the far majority of people just need to like start working out, right? Like, am I wrong on that? Like, it's kind of crazy, dude. It kind of shows that like Americans kind of want the easy way out, I guess, when it comes to weight loss. To an extent, it feels like it's a cheat code. Versus going to the gym. This Ozempic trend is going to end badly. Yeah, dude, it doesn't seem like everyone can take a cheat code and just start losing weight, dude. I mean, like, just like off rip, maybe I'm wrong on this because I don't understand the internals of the drug, but if everyone starts doing that, I don't feel like that's the healthiest way for society to operate. Now, granted, we have so much fast food in this country, so much consumerism in regards to like the McDonald's and Burger Kings of the world, so much advertising for those. I understand that there is a lot of, there's a lot of imposing of eating bad foods, but at the end of the day, these are personal decisions and people got to be able to recognize like, hey, you can't eat McDonald's every day and just take Ozempic and get away with it. Scott says, I agree. I'm a trainer. People are getting lazy. Yeah, dude. And it's so nice to actually lose weight the right way. I'm currently in the process of trying to lose weight. I've gone through a weight loss journey 2 times in my life. 2020 after COVID, everyone gained weight. I lost I went from 160 to 130, 134, so about 25 pounds that month, or that summer. And then again, last year in October, I went from like 180 to 145. Now I'm back at 160. I want to get down to 145 again. But I've done it twice and it feels great. I mean, you sweat, you eat right, you feel like, you just feel just good about yourself. You can see the progress that you're doing. And I've never needed a drug to help me ever. I've just worked for it, How tall am I? I'm 5'7". I'm 5'7". So that's why I think 145-ish is like reasonable. I mean, 150 is fine as well, but I want to see 145. OMAD, yep, 1 meal a day. That also is one of the ways to do this as well. So that's interesting. I guess Ozempic is getting just more and more popular as well. Okay, so I'm Beneficial says GTBP. What is this? Is this another meme stock? GTBP, wow, 178%. Okay. Dude, the market cap is $4 million. Are you kidding me? This is insanity, dude. How can a company be worth and they're publicly traded on the NASDAQ? Wow. I've never seen a market cap that low. Incredible. All right, so this thing's up 175%. FLJ, that Chinese company, they are down 25%. There was the Chinese real estate apartment rental company. What was that other one? Green Wave. This is the one Meet Kevin bought. This thing is up 19%, 18 cents now. And then Faraday Future, still up 92%. This thing hit 277 on Friday. Now it's at $1.98. But that's a lot. That's a lot. Dougie Fresh says, I was a professional cyclist and had to quit last September because I had a baby. I was 160 pounds. Now I'm 190. I was riding my bike about 400 miles a week. Wow. That's great. Dude, I've been wanting to get a bike. I feel like I should, because we have like a lake near our house. Like there's like a mile long track. I feel like a bike is something I definitely should have. I walk around it all the time, but a bike would be great exercise. Yeah, dude, there's so many ways to get out there and be active. And even if you just go for a walk, there's so many things you can do. I could just never, unless I had a medical problem, I could never imagine like I need to inject drugs in my body to help me lose weight. Like, unless literally like I just, there's a medical issue, like I really have to, but I don't think that's the far majority of people. The far majority literally just need to sweat a little bit and to lose some weight. Regardless, it's a trend. And that trend, if you're a HIMS investor, you're up 8% because of that trend. Okay, Tupperware's up a little bit as well. Tupperware up pre-markets. Yep, Tupperware's there as well. Okay, real quick, let's do this. Tupperware's up 13%. Let's do this quick segment on Robinhood. A lot of people over the weekend have been complaining about the 3% match on the credit card. So I had Ram Alahuaya, probably saying his last name wrong, but we had a really good podcast. I recommend people check it out over the weekend. You click on live on my YouTube channel. He gave the bear case for SoFi, Palantir, and Tesla, and gave a pretty in-depth bear case on all three of those. He triggered a lot of people in the SoFi community, and I'm quite shocked at the amount of people on Twitter that are calling him a fraud and like he's this. I'm just like, dude, he gave it a pretty decent bear case. No one wants to debate him, apparently. No one wants to like get on a live debate and have me moderate it and debate him because they don't want to give him the time of day. And it's shocking to me because I'm like, wait a second. When Edwin released the Bear Cave article for Palantir, I debated him within 5 days, and he was down to debate and defend his ideas. And I debated him because I wasn't afraid that he's reading, he had some salacious claims, but I still engaged in debate with him. If anything, you could say Edwin's claims were more fraudulent than anything because he called Palantir an AI imposter. But I still debated with him. By the way, he's coming back on the channel. Probably next week, we're going to have him back on the channel, and we'll have a discussion again on his updated thoughts on Palantir. And we're relatively friendly with each other, me and Edwin. We were DMing over the weekend, so he'll be back on the channel. We'll have a good discussion. But it's shocking to me that people don't want to debate Ram on his views, and it's kind of scary to me that people don't want to actually engage with him. Now, nonetheless, we had a conversation over the weekend, and he gave out the bear, and he gave out the bear case for Palantir as well. Every stock that he didn't like, he gave out the bear case, and he's not one of those like irrational bears. He has Nvidia, Microsoft, Tesla, Apple, or not Apple, Meta. He has, or not Microsoft. He has Meta, Google, and Nvidia. He went long on those. He went short on Apple and Tesla. That trade seemed to work out really well. He found stocks like Build-A-Bear. He was finding a lot of different stocks, a lot of different ideas, and I thought it was a really good podcast just in terms of understanding his investment philosophy. One of the things that people started getting mad about on Twitter over the weekend is Robinhood can't do this 3%. I had a quick thought. What if the 3% that they give you in cash back? A lot of the SoFi people were upset about this over the weekend. Like, there's no way they can do this profitably, blah, blah, blah. What if they never even lose that 3% on the majority of people that use the card? And the simple argument right here is there's a transfer to brokerage button on the credit card app. What if once you get your 3%, what if the majority of people, when they get their $90 after spending $3,000, they just put it back into Robinhood? And it's almost like Robinhood gave you $90 in cash back, and then you get it back via deposits. Let's take a look at this quick video real quick, then we'll get into market open, but this is what it would look like.
Cash back. You'll see I'm earning 3% cash back, and I have about $100 worth of cash back rewards. So traditionally, what other credit cards allow you to do is use your cashback rewards for travel, for shopping, for gift cards. We let you do all these things as well. But there's one thing that is truly unique to us and only we'll let you do, which is to invest your cashback directly into your brokerage account. So I'm going to show you how it works. Now, first, let me go back to my brokerage app. Keep in attention on that number. I have $4,000 in my investing account. So now I'm going to go back to my credit card app and transfer all my cashback over to brokerage. So I'm going to go here. Press this button. Done. That's it. The money's in my brokerage account.
I think a lot of people will do that. And so one thought I had over the weekend is if all the 3% Robinhood gives, it comes right back to them, then maybe they're not fully losing that 3%. Monday, May 20th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. wake your ass up. Here we go. S&P 500 starting off the week 529.54, up 0.02% in the pre-markets. Faraday future $1.88. It's up 83% on the day. Very interesting. So here you go. We're up 80%. It's falling a little bit. We got the red candle here, but it was up 83%, now up 77%. Robinhood, $20.07, down about 0.2% on the day. Now we are green on Robinhood, $20.11, $20.13, up 0.2% on the day. HIMS, $16. Wow. GLP-1 is getting the market excited about HIMS, up 11.2%. Wow, almost up 12% as the market opens. $16.30 on HIMS. There you go for HIMS. Apple 189, Nvidia 939. We've got Nvidia earnings on Wednesday. I'll be live on this channel and I will be discussing a video. So please make sure you are here Wednesday, 3:45 p.m. This is going to be a big earnings. It's going to determine a lot about the direction of the markets. Nvidia here at 939. We got Bitcoin just under 67,000. We'll talk about Bitcoin inflows in a little bit, but Bitcoin inflows have been spectacular. And it does seem like that supply shock thesis around the halving event is coming into effect. And that's going to benefit the asset price as well. Intel 3184. Intel recovering a little bit from being down below in the 30s last week. IBM 169. TFC 3997. SLG 53. SoFi 725, down 0.41%. Reddit 6172. That OpenAI deal was really good news for Reddit last week, and they're up about 15%, I think, in the past month. Enphase 113. Shopify. I think Shopify, is going to bounce from here. It's down 22%. Does it deserve to go lower? You could argue yes. Is it one of those stocks that's probably always going to be overvalued? Yes. So I don't know if Shopify necessarily falls into the 50s, as some people are saying, but at 58.90 after being down 22%, from a technical perspective, it doesn't look like it's in the worst situation. And maybe the market's warmed up a little bit after the crash. Coinbase at 208. Where is Palantir? Palantir, $21.59, down 1%. It does seem, and I've been saying this for the past couple of weeks now, that this is time for essentially bulls to be able to get more shares. I mean, and that's how I'm wrapping it up. The macro seems to have zero effect on Palantir. I mean, the market's ripping at an all-time high, inflation starting to come down. Doesn't really matter to Palantir. And because one could argue Palantir is pretty not richly valued, but fairly valued right here in this $21 range. And the street's just looking for a lot more growth to justify further multiple expansion. And again, it's up 30% year to date. You would be happy by the end of the year if Palantir got 20 to 21.5. If it was a slow grind, we just got it very early. So I think the next earnings are going to be really good and they're going to continue to prove these numbers. But right now, the street doesn't care about Palantir. It's kind of in this wait and show me phase, which I think is just good for accumulation on the stock. HIMS 1623, up 11% on the day. Pretty incredible for HIMS. I also think selling puts on Palantir is not the craziest idea either. If Palantir stays stuck in this range, there's some juicy put premium. And then if it does fall to $20, $19.50, whatever it may be, you get to pick up shares at a pretty cheap price. Greenwave up 11%. Faraday future up 98%. So this thing is past $2. It continues to surge past $2. And we'll see if this thing can get back to 277, which was the all-time high. Silver over the weekend surged, which was very interesting. I mean, there was a lot of reasons for why silver went up, but silver right now we're looking at, let me share it right here. It hasn't had a 13% move the way it's had in a while. So if you can look at year to date, this thing is up 33%. It was $26 on May 3rd, all the way up to $31 now here at up 33%. Over the past year to date, and over the past 6 months is up 33%. Over the past month, up 15%. So silver has started to do well. Gold, again, also very close to all-time highs. We had some Middle Eastern instability in the markets, and that's what's letting gold go higher as well. Google is at all-time highs. Let's look at Google. Wow, 178. There you go. Okay, so let's look at all the Mag 7. Mag 7, we've got Meta up 471. Apple's the only one red. Microsoft's at 422. Google 178. Amazon 186. Amazon all-time high around 189. Nvidia 943. Nvidia trying to get right back to 950. Tesla as well, stuck in this kind of 170 range. At least it's not 135, but still 175, down 1%. And then Faraday Future, the other Mag 8 that I've declared them to be, up 112%. It really does seem like there's a band of people on the internet that just believe they can get Faraday Future up to like the $3 and $4 range if they keep buying it. And so maybe that just, pulls this thing forward. But we saw on Friday, an epic red candle at like 359. I mean, this thing just collapsed. So the idea that can't happen again, I mean, I think there's a big chance that can happen again. The question is, at what price does it happen? And how determined are the shorts for keeping this story going. Where's GameStop? GameStop, as the market opens, up a little bit. All right, so we got a little bit of green. Steve had a very interesting thesis on the market close, if you guys watched that on Friday, on what GameStop can do to pivot, and it revolves around Pokemon and the idea that GameStop is already getting into the Pokemon trading game. If they turn their stores into like Pokemon trading card centers, maybe that could be a big market. I was talking with a guy over the weekend who's actually into the Pokemon selling business, and he told me, like, dude, it's not a joke. Like, he's making a lot of money off Pokemon cards. So it's a big market. There's a big TAM there. If GameStop pivots into Pokemon, I mean, that would be interesting. But right now, I don't know if that's what management is thinking. They are thinking of diluting shareholders by 45 million shares. That hasn't happened yet, but that's one concern there on GameStop, up 1.2%. S&P 500, 530, Palantir 2140, Google 178.5, looking to try to get to 180 on Google. Incredible. Robinhood falling a bit now, 1.754% at 1973. For me on Robinhood, again, I really do think holding 19 is going to be the most important. If we can do that, the May numbers are going to be fantastic when they release on June 15th. My opinion, I think May numbers are going to be really good. Bank of America already said, hey, this story is set in stone. We kind of like what we're seeing. Retail participation is up. Robinhood's product is creating organic growth. So we think this is the best way to play the retail bull market. They have a market call of around 5,500 on the S&P. Robinhood's going to benefit from that. So I think Robinhood ends the year pretty strong, but holding 19 to me in the short term is the price action that I'm looking for the most. Apple 189, Nvidia 948, and again, Bitcoin right here just below 67,000. Engineer X says, I dumped Hood on Friday. So I know Engineer X has been holding Robinhood for about 3 years now. And I believe you said in the chat you made $7,000 on it. I'm happy for you, dude. You made some decent money on it. I think you had an average of 18, and selling at around 20 is not bad at all. I think some people may be saying, oh, when everyone's getting bullish, it's time to like get bearish. I'm sympathetic to that. I understand that. Like I totally resonate with that. I just think if you've done, a lot of due diligence on Robinhood, the valuation still doesn't make sense given the growth. So, yes, it's kind of like the Nvidia story in terms of Robinhood's not Nvidia, but just because people got bullish at 600, 700, 800, 900 does not mean that was the time to sell. It means the story had a lot of momentum behind it. I think the exact same thing is happening for Robinhood, and so people are going to take their profits, but that's going to create entry opportunities for a lot of people that want to get in on this story. Snowflake here at 163, Intel 3193, Alibaba flat on the day, but 87 touched $90, is up 30% for the month is Alibaba. Pretty damn incredible to see that on Alibaba. Any news on what's happening with Next? Okay, what is Next? Next Decade is up 8%. I have no idea what's next. I'll look that up in a bit, but Next Decade is up. Some of the meme stocks continue to be up. GameStop again up 1%, Google 178. And then Faraday Future, 93%. We got a red candle there from 208 to 198, but still in that range for Faraday Future. What I think is also going to be really interesting to see is how does Nvidia affect the meme stocks? I mean, that thing to me is going to be like, what does Nvidia do in regards to, when Nvidia goes up or when Nvidia goes down? I mean, how much market participation leaves or enters into something like a Faraday Future or even like a Palantir, right? Palantir is not a meme stock, but like Palantir is an AI correlation to Nvidia. So I think there's a lot of ways that Nvidia is going to affect the broader markets. And again, we're expecting 22.8 billion. If we get 24, I think the market likes it. If we get 26, I think we really rally. And last time I think we beat by 2 billion, which wasn't bad either as well. So we'll see how that plays out. Duolingo, let's look at that one. Duolingo 175. So Jed is asking, is Duolingo a good short? I think the money the shorts have made have already happened, because if you look at this thing, look, it was at 250. Now it's at 175. Market cap at 7.5 billion. I don't think they're profitable yet. I don't really think the financials are amazing on Duolingo, but the growth is exceptional. It's like 60% year over year. So the short on 251 to 173 made a lot of sense, because 251 it was getting a little pricey, even if the growth was high. From 175 down to like what, 100? I don't know if we get that. I would have to go deeper into the financials, but I think same thing with Shopify, dude. Like these Shopify and Duolingo currently are still overvalued. You could argue that, but like they fell a lot. Like, and psychologically, after that big of a fall, it's just hard to see who else is going to continue selling, especially if you're long and you believe in Shopify. Chris says Duolingo might be replaced by the next ChatGPT. I don't think so. I think a lot of the, people saw a lot of different use cases for the GPT 4.0 models over the weekend. A lot of things have to do with voice and translation. I think if you're on Duolingo, you're trying to learn how to speak. a certain language, and you need interactive engagement tools and gamification to learn that. Talking to like an AI tutor will definitely help. If anything, I think Duolingo just, pays OpenAI to use their AI voice assistant into the application itself. But you need an integrated ecosystem to learn a new language. And I don't think, OpenAI's voice assistant is that ecosystem. It's definitely not a specified ecosystem for language learning. So if anything, I think it's bullish for Duolingo, not bearish, which is, this is the trend I'm seeing across the entire market. Everything in AI is bullish for potential competitors, right? It doesn't necessarily replace them. It just allows them to add that feature to their product and then use it in a different way. So I don't know. I think Duolingo is going to benefit from things like that. Question is just going to be how they choose to implement it. SoFi is down 1.44%. SoFi is down, continuing to be down. Now, I think we get the short report update on SoFi pretty soon. The last short report we got, at least from the sources I look at, was April 30th. It's May 20th. Let me see if it's updated today. So we should get an update soon. Right. Yeah. Right now, as of May 30th, I think it might actually come out today. It's 18% short. Now, some people are saying, no, it's 35% short, right? There's arguments going on that SoFi is much more short than what people are thinking. And that's the potential for a squeeze. If that's the case, I mean, that would be awesome. Palantir now down 2.23% of the day, but don't know if that's actually true. So we're going to have to see if it's the squeeze candidate and it's a potential for a meme stock than anyone else. Grayscale CEO stepped down. Oh, that's great news. That's great news. Not because I don't like him, but because I think, dude, this guy's the reason for why so much I don't know why they haven't lowered the fees, but like 600,000 Bitcoin were liquidated over the past 2 months from Grayscale because they just didn't lower the fees. And so now that I think they started to lower the fees, which is why Grayscale hasn't had as many outflows. As you can see, GBTC charges a 1.5% fee. I think BlackRock's charging like 0.35% or something. So yeah, you're going to take your money and you're going to put it into one of the other ETFs. And that was hurting Bitcoin because you got so many Bitcoin that are being sold every single day. So the ETF inflows have been phenomenal. Let's talk about that right now. For the past 3 days, we've had exceptional inflows all in a row, and we'll see if we can keep the momentum on today. So we had 303 on Friday, May 15th, or Wednesday. It's 257 on Thursday, 221 on Friday. 3 days in a row, multi-$100 million ETF inflows, in addition to all the other inflows coming in from Millennium Management, the state of Wisconsin. You got Mr. 100, who, if you guys don't know him, he buys 100 Bitcoin pretty much like every other day. He bought 104 Bitcoin last night. It's this like random blockchain address that no one knows who it is. Some people are thinking it's Jeff Bezos, but it's probably not Jeff Bezos. But so we're just seeing more momentum come in. If that halving event starts to take, well, it's already started to take effect, but if the 450 Bitcoin that are mined every day start to get gobbled up super quickly, it's going to create demand side pressure or supply side pressure, which increases the price given the demand is solid. And so we'll see what happens with the Bitcoin, but it's nice to see GBTC has also stopped selling, at least for the past couple of days as well. S&P 500 here at 530. Let's go to the Bitcoin and crypto stocks. We've got Coinbase down about 0.65%, Robinhood down about 2%, 1969, Bitcoin 66,914, CleanSpark. This CleanSpark has not been able to break out. At one point, it got to 24.30. Then management diluted the shit out of shareholders, went right down to 14.80. Now it's at 15.93. It's kind of just been stuck in a range. And the catalyst is Bitcoin going much higher. Unfortunately, Bitcoin is just recovering to 67,000, given it was at 56,000 in April. So you kind of need Bitcoin to break out to really see momentum. MicroStrategy here down a little bit as well, 1577. MicroStrategy, phenomenal recovery from 1,000 to 1,500 in the past 2 weeks. And then you got Riot down 1.1%, and then Marathon down 1.95% as well. Alex says, I know PayPal is undervalued, but at what point is the opportunity cost too big? Well, you hit it right on the head. The opportunity cost of my capital in PayPal has been $7,000. That's been dead. So yeah, the opportunity cost sucks. You know, this is what happens sometimes. And for me, I'm not willing to take a $4,000 loss right now. I think when rates get cut and they have another 2 earnings by November, I think it's closer to $75, $80, which means I basically break even on my options. Now, if I'm wrong, then I'm wrong. And that's when we take the loss. But I'm willing to, I'm already, I've already wasted like 12 months in this thing. Might as well go down another 3-4 months and just see if they can get recovered. But yeah, opportunity cost sucks. Opportunity cost definitely, and it happens. It happens to everybody. You get into a thesis, you think the thesis makes sense, and I think the thesis still makes a lot of sense, but it might take more time to play out. And so I guess we'll see what happens. I thought the earnings on PayPal were incredible. I think their buybacks are still going to be monumental. $66 billion market cap makes no sense. but it might take more time. And if it takes more time, then it takes more time. Google right here, 179.34, up 1.13%. Again, the AI search overviews they announced over the past week, they're pretty damn incredible, dude. And like, it does seem, you know, on Friday, we talked about Google killing Perplexity. Some people were like, no, Perplexity is different. Dude, it feels like Google's killing Perplexity. It does not seem like there's a use case for Perplexity now that Google has basically taken their model of giving you search engine answers without being a search engine and incorporated the entire model into the platform. And they're finding different ways to incorporate ads into the generative AI search answers, which means the monetization will decrease, but it's not going to go away, as Brad Gerstner said. You know, Brad Gerstner's thesis has been Google is an existential threat versus the LLMs. He's been wrong on that, dude. He's been just wrong. It's like, no, the LLMs have actually been a tailwind for Google, not really a threat. So you got Google seeing more momentum as well, trying to get to 180. HIMS is 17. Wow. HIMS is 17. Incredible, dude. Holy crap, it's up 18%. Oh my goodness. So if you were in HIMS, congrats, man. Like, I get, dude, Ozempic must be so widely respected by the market that they're willing to give HIMS 18% on just the announcement that they're making Ozempic more accessible. I mean, that makes sense because Eli Lilly's up 30% year to date, and that's a big company. That's up another 1% today. Yeah, let's look at the 5-year on that. Yeah, look at that, dude. In 2023, March, it was 330. It's 778. More than double their market cap from 350 billion to 750 billion. Incredible, dude. It hit at 800 at an all-time high, 799. And that's pretty much all because of Ozempic. That's insane. That is absolutely insane. Oh my gosh, that's incredible. But there you go. There you go. That's helping. HIMS is helping. Put in the chat if you have HIMS. I don't have any HIMS. I know a lot of people like HIMS. I just never got into it, but put in the chat if you are into HIMS. Robinhood 1995 right now, down about 0.7% in the pre-market. SMCI, this is another one to watch after NVIDIA earnings. Their earnings were, relatively okay. They went to like 760 or something, now back in 916. If NVIDIA crushes it, looks like SMCI is going to have a lot of business in the future, given NVIDIA is their number one client. Palo Alto Networks at 316. We got that as well. And then Walmart had a great earnings. They're at 64.51 as well. Big Billy's up 155% on HIMS. That's incredible. That's not bad either. CCL up 5%. Yeah, Chris has been talking about this one a little bit. CCL, Carnival Cruise, that's up 5.23%. And then you got HIMS here up 18% as well. Any interest in Elf Beauty? Okay, so this is an interesting one. Elf fell after Ulta fell. Oh, wow. Elf's down 5%, huh? So let me look at the year-to-date on Elf. So Elf is very interesting to me. Elf right now, Elf was at 221 on March. Then Ulta came out, Ulta Beauty, one of the largest makeup retailers on the planet, and they said, hey, we expect same-store sales to be down like 10%, 7 to 8%, something like that. And then Elf went on a massive decline. Now, it makes sense. Elf and Ulta are correlated. If Ulta's not getting the momentum, Elf theoretically shouldn't, right? If Pepsi comes out and says, hey, we're like just not seeing any sales in China, then if people don't like Pepsi in China, they probably don't like Coke in China, right? There's like they're relatively the same drink. Maybe people don't want to drink those drinks anymore for some reason. So that's going to hurt sales. The differentiating variable here is that Elf has a totally different go-to-market if you look at their social media versus Ulta. I mean, Elf built their brand off literally makeup YouTubers and TikTokers talking about Elf. So I don't know if the go-to-market is enough to differentiate them from Ulta to the point where their sales are actually accelerated if Ulta's sales are deaccelerating. I don't know, quite frankly. It is interesting at $8 billion, given the growth. I think it's relatively cheap, especially after this 30% decline from 221. However, if Ulta's struggling, I don't know if Elf can get away from that, given they're in the same space. So Ulta, as you can see right here, was at $605, dude. Now it's at $390 over the past month. So Ulta's an interesting one. We got to see, what happens there. Or Elf, but I wouldn't buy just because I don't know enough about the makeup industry. If I knew enough about the makeup industry, maybe I could say, no, this is bullshit. Ulta's down for whatever reasons. Elf is going to be fine. But I don't. The way I think about them is if Ulta's down, then Elf is going to struggle as well. And I guess on their earnings, we're going to see how that plays out. PayPal 64.26. HIMS is up another 20%. Again, for those that are asking why is HIMS up 20%, they approved basically Ozempic subscriptions for their customers at a lower rate than other pharmacy retailers. And so they're adding to the value of their subscription, and the market believes that they're only going to grow more. And the other thing about HIMS is, dude, they're growing like crazy already before the Ozempic. Ozempic's a massive tailwind. Now they're profitable. They increased the guidance from I think like 1.2 to 1.3 billion 2 weeks ago. So outside of the CEO getting political, there's really nothing to get that upset about when it comes to the actual stock. And so that's what you got in the context of HIMS. Robinhood, $20.01. So Robinhood back above $20 as well in the pre-market. Okay, let's go through some headlines. We have a bunch of headlines I'm going to get through as well that I want to discuss. So let me pull up this right here. Okay, so first in Taiwan, a couple interesting things. Taiwan exports have reached a month-over-month high. And that's really good because it shows that even though there was a earthquake in Taiwan, which we had last month, that they're still able to do the exports that they need to do, and the market is still buying from Taiwan as well. So that's the first thing on Taiwan. Really good to see as well for TSMC that their business hasn't really struggled even though there was an earthquake last month. Second, Chile. Chile's economy advanced by 2.3% year over year in Q1 2024. It's much faster. In fact, it's like almost 10x faster than the 0.4% rise in the previous 3-month period compared to market estimates of 2.5% growth. This was the strongest expansion for Chile since Q1 2022. Why is this important? Because we saw Malaysia's GDP start to inch higher as well by about 2% last Friday. So across the world, one of the biggest concerns that bears had around the American markets is that the S&P projections for GDP growth were only 1.6% compared to 3.35%. Jerome Powell's argument was like, wait a second, we knew that 3.3% was unsustainable. So 1.6% is actually in line with expectations. And by the way, we don't want it to grow that much because inflation would come back. So all the bears getting upset about GDP growth not being as high as expected, it actually was super bullish for inflation and for what the Fed was looking for. But now we're seeing countries across the world start to say, hey, our GDP projections are going up. And I think one of the reasons it's going up is because of AI becoming one of these more universal themes that's allowing earnings, even in countries that don't have the Googles or Amazons of the world that are there, to continue to gain momentum. So that's what we're seeing on Chile and Malaysia. And those are a couple updates there. Now, a couple other headlines that I wanted to show. So in 2000, the average selling price for a car was $22,000. In 2024, it's $47,000. And my dad just bought a car for about $42,000. So it's right around that range. 115% increase over the past 24 years. Obviously, inflation has had a role there. However, used car and new car prices and auto insurance was lower in the latest CPI report, which is a good thing that we're seeing in regards to inflation as well. Another headline about Apple. So this part was also really interesting over the weekend. HIMS is at $18 now. Yeah, HIMS is at $18. Apple has slashed their iPhone prices in China amid Huawei competition. Apple is offering discounts of up to about $320 on different iPhone models in China. Apple is up now year to date. They're buying back $100 billion of their stock, but they're starting to cut their prices. Why are they starting to cut their prices? Because they're obviously seeing that people are not upgrading in China, which is one of their largest markets, given Huawei is starting to ramp up. So one of the things to keep in mind for everyone who's bullish on Apple, and I'm relatively bullish on Apple, even if I thought the Vision Pro was not that exciting, they are starting to do what Tesla's having to do in China, which is cut prices. It's actually hilarious. Apple and Tesla are kind of deploying the same strategy here. And so one thing to think about as we look at Apple, HIMS, Robinhood, wow, $20.23. Robinhood up 1%. HIMS now $18, up 23% on the day. One thing to think about when we think of Apple and we think of Chinese competition and what it means for Apple, trying to increase overall growth in parts of the world that may not be upgrading to their newest phone. Amid here in the UK, we're looking to cut interest rates in the summer. Yeah, the Central Bank of England it looks like they're definitely going to cut in the summer, and at least they're projecting that. It looks like, if we get a good inflation reading over the next 2 months, Jerome Powell, July is when, so Steve was saying July is when they have to cut. They can't cut in September because it's going to be too political. June is going to be too early. So July is the month. And if it happens in July, I mean, like, the summer is going to be pretty fun, but they would have to see really good evidence in the next month. And hopefully we do see that evidence. Robinhood, $20.20, up 0.61% on the day. And HIMS, $18.10, up 24%. Wow. Pretty damn incredible, dude. Pretty damn incredible. My Intel bags are kind of pumping. Okay, let's go to Intel. HIMS is not stopping. Intel, 32.13. Yeah, nice to see the 1% on Intel. Most of us believe Intel is in deep value territory. The risk is the execution on the foundry business to eventually become profitable over the next 5 years. And if you believe in Intel, I don't think, they mess up that business. It's just a question of the opportunity cost of, is your money going to kind of be flat there? You are getting a dividend, which is good. but it bottomed at around $29 right now at 32.13. Nice to see momentum on Intel. And if NVIDIA goes well, it'll also be bullish for Intel as well. Robinhood, $20.22. Robinhood gaining momentum. So at the dip we saw to the 1960s or 1950s again, Bank of America, I don't know if people saw the clip. I showed it on Friday in the market close, but the Bank of America clip is on my Twitter. If you just scroll down, they had their top equity strategists come out and give out the bull case for Robinhood. And it was pretty incredible just from my perspective. I was just watching this guy on Friday and I'm watching the street react to it. And I'm like, this guy has the ear of hundreds of millions of dollars of capital, billions of dollars of capital. Robinhood's, $18 billion company. There's 87% institutional holdings in Robinhood. That's another thing people don't know. They think it's a retail. No, dude, 70% of the company is institutionally held. And their top equity strategist is saying, yeah, we think Robinhood $24, and he's just laying out the bull case. It was pretty incredible to see that. And when someone like that says it, the rest of the world listens. And so that you get some momentum from there as well. NVIDIA here, 950. NVIDIA cracking above 950. Nice to see at this level. And then we got Google here at 179. Now, in terms of Palantir, one thing I want to bring up as well, saw this over the weekend as I was digging into the 13F. So let me show this real quick. 229 funds actually added Palantir over the past quarter. So they either added them for the first time or they previously exited the position and they created a new position. The top 5 funds that bought, these are the names of the funds, but the first one bought 2 million shares. The other one got another 2 million, another one 1.5 million, the other one 995,000, and then Stanley Druckenmiller at 769,000 shares. So we are seeing the institutions, I know the stock has, come down, but the institutions are beginning to add. And I would imagine if the stock stays in this $21 range until the next earnings, that those institutions continue to add as analyst price targets on the street. The average one is around $23. But we did see 229 new funds decide to enter into Palantir for the first time or after having left it a couple years ago. And some momentum started to come back into the stock from an institutional perspective, even if it's not enough to affect the stock price currently at this moment. Google here at 179. S&P 500, 531. We're above 530. New all-time high on the S&P. Wow. Incredible. Dude, incredible. Oh, this is a good comment. Ali says, why is HIMS not halted 5 times? That's a good point, dude. Why isn't HIMS, why does GameStop get halted when it goes up 20%, but HIMS doesn't? I mean, in all reality, I would imagine HIMS has orders coming in, but they're not like billions and billions of orders. I'm being hyperbolic by the second, given GameStop's volume. So, I mean, the volume on HIMS is only 10 million. GameStop, for comparison, GameStop's value is 11 million and GameStop's down 3%. So I think on the peak day, GameStop was at like 50 million in 10 minutes, which is why you're probably going to get a halt. HIMS is still relatively chill at 10 million or 11 million volume, but there's big orders coming in. People are buying it up. Probably some institutions are getting in this as well, because this is a decade-long story with Ozempic, right? This is not like Ozempic's a real drug that's going to last for a long time. And the market cap, by the way, is 3.8 billion on HIMS, relatively small market cap, and it's profitable. So, I mean, it's a pretty simple story, I think, for a lot of people to understand. And if you think Ozempic's going to be around for a while and men are going to constantly need these kind of men health type of subscription products, they do it for women as well, but I think men are the majority of their customer base, then HIMS is going to get momentum. QQQ is up right now, the NASDAQ. 454, almost at an all-time high. Almost at the all-time high as well for the NASDAQ. Incredible. Absolutely incredible on that. Any thoughts on Schumer's $32 billion annual AI proposal where most of the spend goes to defense and military? So I saw this over the weekend for a second. I didn't read the article, but I saw the headline. I think that's ka-ching for Palantir. I mean, I think it's that simple. It's like, dude, if we're spending that much on defense and AI, 32 billion on AI, that's going to be a lot of money for Palantir. Ram, when he came on the channel, he did say that the market, the government loves Palantir. So Ram, if you guys watch the podcast I did, although he's bearish on Palantir from a valuation perspective, that's the only reason he's bearish. He's not bearish on AIP, not bearish on the LLMs, not bearish on the AI movie. He loves Alex Karp. He literally just doesn't like the valuation, which is reasonable. It's very reasonable to be able to make that argument. But one of the things he said, he sold and built a credit risk analytics company, and he used to sell that software from the company to the FDIC. And it was him against Palantir a lot of times in procurement meetings. And he was basically like, dude, they were sucking Palantir's dick every day. He was like, dude, they wanted Palantir so badly. He was like, I had to compete with these guys, and it's like you're competing against something you can't win because these guys just want Palantir so badly. So the government business is what he loves around Palantir. The top line revenue growth is what he doesn't like in terms of valuation, which again, I think is very fair. But it goes to show that if we get $32 billion in AI spend, yeah, I think Palantir is going to benefit from that. I think Palantir will definitely benefit from that as well. Someone says, why are the Bitcoin ETFs not up right now? The Bitcoin ETFs are flat. Bitcoin right now, I mean, let's look at Bitcoin. Bitcoin is up about 1% or 0.6%. Yeah, I mean, there's the Bitcoin above 67,000. Bitcoin needs to go up a little bit more for the ETFs, the spot ETF price action to match it exactly. There also might be some outflows, which is why it's not correlating exactly with the price right now. But the Bitcoin ETFs are just a little down today. They're relatively flat. I mean, but Bitcoin also is relatively flat as well. And Bitcoin's recovering. Remember, these Bitcoin was at 67,000 over the weekend, but then it fell. And so a lot of the spot ETFs might be catching up to the price that it once was at, but then it went down and now it's coming back at again, which is why the correlation might not be as obvious there. June says there's a 10-year patent on meds and many drug companies are coming up with their own GLPs coming for Lilly and Novo Nordisk's lunch. Yes, I agree. The overall trend seems to be GLP and Ozempic is the wave. And as pharmaceutical companies came up with their own versions of it and Hims comes up with their own version of it, they're just going to capitalize on the trend, So it doesn't seem like one company with the patent is going to get all the leverage, but it does seem like this is a trend that's going to play out over the next decade as people want to keep continuing to use that drug to lose weight. Chris says, as long as institutional investors continue to buy Palantir anywhere under 20 for me, I'll continue to buy. Watch what they do, not what they say. Yeah, I agree. The toots are loading up, dude. I also think we're forgetting the S&P 500 inclusion. I don't know if it happens this year, but we're going to be in the running. By latest, it's happening 2025. Like, it's not like we're not going to go the next 2 years without being in that index. We fulfill too many of the requirements. Eventually, as the institutional ownership of that goes up, the S&P 500 is the committee, they're going to have to look at Palantir, right? You just can't ignore them at that point. Faraday future now up 57%. At one point, it was up 115%, now up 57% of the day. So that's going to be a big catalyst as well. I'm not saying that's going to moon the stock, but that means we're going to have more people have to buy Palantir just as a way of getting exposure because it's in the S&P, which will be a catalyst, at least in the short term this year for Palantir. Isn't Ozempic very dangerous? I actually don't know. If anyone in the chat can add some clarity on this, I don't know. Because I want to say yes, Ozempic is dangerous, but then again, these stocks are going up because they're selling the crap out of Ozempic. The only way they're selling the crap out of it is because people are buying it, and people wouldn't buy it if they're dying off of Ozempic. So I kind of think logically it's not as dangerous, but one could argue that it might be more dangerous than meets the eye, or at least it's not healthy or not safe, even if it's not, kill you or anything like that. It is less dangerous than meth. That is correct. It is less dangerous than meth. Heartbeat says too new to tell. That's a good point. We're probably doing a lot of studies on that. They have side effects like every other drug on the market. That is also fair. Being overweight is dangerous as well. That is a good point. If you're massively obese, Ozempic side effects can't be as bad as the effects of being obese. That's a good argument. So there's some cost benefit analysis there that seems to go to the upside for Ozempic. Bitcoin, 67,000. Bitcoin seeing a little bit of a breakout. Robin in 1997 holding that 19 range. We're trying to get in again. Closing above 19 to me is the most important thing for Robinhood. PayPal 64.60. Eli Lilly 775. Carnival Cruise up 4% of the day. Shopify 58, and then Nvidia here at 9.47. Let's take a listen to Bank of America and why they are continuing to feel a bit more bullish around where the market is going.
Global research. Jill, your price target for the S&P for the end of the year is 5,400. That's less than 1% away from where we are right now. Mm-hmm. And yet you still think things look pretty good in the market.
Yeah, I mean, I think we still see upside from here. Equity sentiment has definitely improved. It's not yet euphoric. I think there are pockets of the market where we see more opportunity than others. We've still been in a very good earnings backdrop, continued to surprise to the upside this quarter. But we do think that earnings for the market are starting to broaden out, and that should continue as we get into the latter part of this year. So as some of the Magnificent Seven stocks, some of the big tech stocks start to spend more on CapEx, their earnings growth should start to slow, and earnings for the rest of the market, we think will catch up by the end of this year.
But you think it's not exuberant. Yes, things look pretty good, but your price target is just within a whisper of where we stand. Are you thinking of raising it potentially?
Well, I think there's more opportunity in pockets of the market than just for the S&P 500 overall. When you think about the market broadening out, some of the equal weighted benchmark relative to the cap weighted benchmark. Sure. I even think in parts of small caps, even though we got a bit more cautious on the Russell 2000 after the April inflation data and the fact that our economists pushed out our first Fed cut to December of this year, which could challenge small caps as a benchmark near term. I still think for some of the more GDP sensitive, commodity sensitive parts of the Russell 2 that don't have a lot of leverage or refinancing risk, which is the biggest risk for small caps if rates stay high. So pockets of, energy, industrials, materials, these could actually do very well in the near term. So, I think pockets of the overall market are still positioned to have very healthy upside, even if, the S&P 500, we have, more limited upside to our target.
I think you also said that you like technology broadly, that you think it's going to catch.
Okay, HIMS is continuing to go higher. So yeah, Bank of America, they're relatively bullish in the market this year, and they see upside towards the end of the year. HIMS, wow, 25%. Just incredible, dude. Just incredible. If you got some leaps on HIMS, you got to think, man. You got to think if you want to hold on to those leaps, given you might be up a lot when it's up 25% in a day. Now, granted, I mean, if you had like the $15 leaps for 2026 or 2025, I mean, you're deep in the money here. And so the leaps should be doing relatively well. And if you think HIMS can maintain this and the momentum is not stopping, which it doesn't look like it necessarily is, 1863 now, it's looking like it's trying to get to $20, then those options are just going to keep printing over the coming months. And we haven't had the rate cut yet. Roaring Kitty has not tweeted. That's correct. Roaring Kitty has not tweeted. That's also not helping the GameStops of the world. Look at that, dude. Just keeps going. Absolutely incredible. HIMS here, 1878 on the day, up 29. Look at that, trying to get to 19. I mean, look, and price to sales of 4, market cap of now 4 billion. You could argue it's a little pricey, but their growth is, I think, closer to 80%, literally year over year. So the growth, you could argue, justifies this. And in a market where in a world where the stock market's looking for exceptional growth and exceptional earnings to be able to justify, the continued run we've had, HIMS looks like one of those companies that's putting up those numbers. I also think the market's pricing in a lot of what's going to happen in the future, because if they know Ozempic's selling like hotcakes and HIMS is now selling Ozempic, they're going to open up a market, and it might be cheaper than buying Ozempic in other places. And that gets you into the ecosystem of HIMS when you subscribe to their business, and then they upsell you on all these other products. It just increases the average order value, which then increases the LTV for all these customers, lifetime value. And that's going to create more earnings growth for HIMS. There you go. Jem said, I sold when the CEO tweeted. Now I regret. Yeah, that's one thing. When people were selling when he made his Palestine-Israel comments like public, I did feel that was a little bit of virtue signaling. Like, not only was he virtue signaling with the tweet, but the people selling a business that's growing 80% year over year, that's now GAAP profitable, going to do 1.2 billion in revenue because they didn't like what the CEO said. I can understand it. I'm sympathetic to why you don't want to support that business morally. But if you thought his tweets were going to necessarily ruin the business, I don't know, dude. I mean, like, it's one of those things. It's like people selling out of Disney because they think it's woke, or Google because they think it's woke. It's like, at the end of the day, the market cares about money. If they put up the numbers, they're going to win, So, now, I didn't like the CEO being political. I did not. There were a couple CEOs of the weekend. I'm not going to say their names, but they were being political, and I just got so annoyed by it, dude. The thing that's annoying about it is because there's a level of narcissism within the CEOs that think they can affect change in the real world when their obligation is to be a fiduciary to shareholders. And they want to solve all the problems in the world. It's like, dude, do that after you make people money and retire, and then go start your podcast where you talk about, whatever political issues you want. But like, when you're trying to make people money, make me my money, dude. It's just, so I think it's a level of narcissism, and I don't like that as a personality trait. Now, if you're Elon and you've already made people a lot of money and you've already changed the world 17,000 times, you have the right to start being political, right? Or if you're a carp where your business depends on you being political, you know, that's how you get more customers, then you have the right to do that. But if you're selling dick pills, it's like, I don't know if that matters that much. Hims is at $19 now, up 30% on the day. Absolutely incredible for Hims as well. Amazing, amazing. $19.05. Where's AMC? AMC, $4.66. AMC is up 6% on the day. GameStop is at $21.84, down 1%. Hims, $19.14. Goodness gracious, dude. Goodness gracious. Wow. Absolutely incredible. Mind Potential says your podcast with Ram was great, but Ram is doing rear view investing. He could never catch an Nvidia early though. He bought Nvidia in January, dude. That's why it was so weird. I don't think people really watch the podcast. Like, someone being bearish on Tesla, Palantir, and SoFi for a variety of reasons does not mean they're a bad investor. I mean, he has Meta, Google, and Nvidia since January, and he was short Tesla and Apple. I mean, that's been an amazing spread trade. Hims down 1940. So again, that's why I thought the podcast was really good, because he's bullish on tech. He's bullish on the markets. But there's some stocks that he just thinks are overvalued. And people, when they see that, they think, oh, this is a perma bear. It's like, no, dude, that's not. He just has a different philosophy. But that doesn't mean that he's bearish in general. Also, one stock, wow, Hims, look at this, up 36%. This thing is trying to go to $20. I think it's going to go to 20. It might end up going to 20. He's also invested in Build-A-Bear, dude. I didn't even know Build-A-Bear was public. This thing's up 30% year to date. And that's why I also really liked his methodology, because everyone wants to try to find these unknown stocks. It was at $21. Now it's at $30 year to date. Pretty damn incredible, right? So trying to find companies like that is really exciting. Just the question of if you can have a methodology or philosophy to get there. Wow, Hims is 6 cents away from $20. Looks like it's trying to get there. I mean, dude, up 40% in a day is insane. Wow, broke through 20. There you go. $20 on Hims, up 37% in a day. In a freaking day, dude. Wow. Wow. Now, look, I don't know if this is too much too quick. Again, we talked about why they're up. The earnings growth seems to make more sense. 35% in a day kind of feels a little like it's going to give some of that back to the market. Like, I don't know who's buying after it runs up 33%. I mean, I guess there are people out there that are, I feel like the institutions already got in. Like, I don't think this is retail, dude. I think 35% in a day cannot be retail. There's no way. There's got to be some firms that cover pharmacy and biotech, and they cover weight loss, and they were like, oh, Hims is getting in. All right, let's just add it to the portfolio. And they bought it in the morning. I don't think that's all retail. Now, after being up 30%, we'll see if there's any retail buying it. But there you go. Hims is up right now. Ram seemed as though his bottom line is cost to potential. He won't buy a company he likes if he feels like it's late or it's already started to run. Yeah, agreed. He doesn't want to be last into the name. And like Hims right now, if you want to buy it today, I mean, you're last into the name, dude, at least today. Like, if you're buying after it's up 30%, like I just don't think that's usually the winning strategy. That's why it's hard to chase GameStop or AMC or Faraday Future, because after the thing is up 5,000%, it's up 65% again today. Are you last in or are you still early? I mean, usually 9 times out of 10, if the thing's up 5,000% in 2 weeks and you're after that 5,000%, you might be a little late. But granted, it's a meme stock and they can do whatever. But that's one thing to think about there. Or you have to understand the company really well. Like on Robinhood, people are thinking they missed the boat at $20. I think there's a lot more momentum just given the research I've done. But if you've done no research and it's up, 57% year to date, yeah, you're probably going to feel like you're late. Now, granted, I think there's a lot of room to run. There's a lot of expansion that's happening for the business. So I think there's still room there. But it's one of those things where he doesn't want to get into it, unless he got in at $10 or $12, right? Speaking of Rom, versus at 20. Bitcoin here, 66,881. IBIT down a little bit. The BlackRock ETF Palantir at 2134. I'm probably going to be buying some more Palantir today. If we stay in this 2130 range, or just below 22, I will be buying more here for Palantir. Calls that were expiring on Friday are up 20,000% for Hims. Wow. Let me look at those calls, actually. Let's look at those calls. So let's go to Hims. Up 30% now, $19. So, wow, dude. If you had a $20 call, it's up 17,000%, expiring this week. What if you have like a $15 call? Wow, there's actually 1,000 of them. Look at that. $15 calls are up 1,400%, and 1,000 of them were open. So some people made some good money gambling on expiring options this week. This is the benefit to doing weekly options. If you're right, if the fucking they announce Ozempic and the thing goes up 30%, you're gonna go up 10x in like literally a week. Now the odds of that happening every single week for a majority of stocks is low, but that is the reason why weekly options tend to outperform leaps in the short term, but overall leaps tend to, I think, be more profitable given they have time for the thesis to play out. A couple of charts I want to show with you guys. So this chart was really interesting. If you're a bear, you're not going to like this chart. The S&P 500 performance after a bear market bottom on average is 57.7%. 57.7%. 2 years after the low. So if you look right here in 1948, we had the bull market peak. In 1949, June, we had the bear market bottom. The S&P 500 went down 20% during that bear market. 1 year off the lows, it went up 40%. 2 years off the lows, it went up 61%. So far, we had the bear market bottom October 2022 after a bull market peak in January 2022. We went down 25%. 1 year out, we were up 21%. 2 years out, which is today, we are up 48%. On average, that means there's 10% left to go higher in this bull market if you would think history tells any story about how the market should perform 2 years out, which means by the end of the year, this chart is signaling Ryan Detrick, he does amazing research at Carson. His argument is, hey, we have another 10% left to go in the entire market towards the end of the year if historically the 2-year average of 57% after a bear market bottom 2 years after it bottoms is correct. Right now, we're only up 48%. So Tom Lee saying 6,000 right there doesn't sound that crazy. I mean, when you look at stuff like that, it really sounds actually relatively possible, especially if inflation is coming down and we get a rate cut and AI earnings continue to show momentum. Another thing I want to show you guys, this was really interesting. So I went through Stanley Druckenmiller's 13F filings, and I saw some things that were really surprising to me. Of course, he had a Palantir. That was the big news over the weekend that was the most exciting to me. And for the Palantir shareholders, it's nice to see Stan back into the action. But also, he added $664 million worth of small cap IWM Russell 2000 calls. I mean, this is incredible. He really sees the broadening of this market to small caps, and he's taking a more than $500 million bet just on small caps. He had 307,000 shares of regional banks, so he thinks the regional bank crisis is basically done with. Reddit, he had 175,000 shares of Reddit. I guess he sees there's a need for real-time data from platforms like Reddit, and we saw that with the OpenAI partnership. Palo Alto Network, he added 74,000 shares. He already had about 70,000, so I think when it bottomed at 275, he probably bought with Nancy. And then he sold all of his ABCL, Accelera, and DraftKings. So interesting moves from Stan. The big ones are small caps. I mean, 664 million worth of calls is just incredible in terms of how he thinks the market's going to play out. And he was right on Nvidia. I mean, it seems like he's saying the next growth curve is not just going to be AI and tech, even though that will grow, but it will be a broadening of the rally, basically the Tom Lee thesis. And if that's the case, small caps potentially could do very well. IWM right here, 208 right now. It's up 8% year to date. Bitcoin, 66,000. HIMS at $19, still holding $19 on the day. Shopify, 58.76. Google at 179. S&P 500, 531 on the day. Robinhood, 1987. And then you got Palantir here at 21.34 on the day. Not bad. Not bad at all for the S&P. All right, there you go. Why is this guy selling at the bottom? Always he did with Palantir, now with ABCL. Well, ABCL, I think, is one of those things that's going to take a long time to play out. Palantir made sense. He moved the money, put it into Nvidia, and Nvidia played out. Now he's back to Palantir. ABCL, I don't understand their business model as much as other people do, but it's one of those things. It's a biotech. It's a unique biotech, but it's going to take time for that to, actually play out. I don't think it's going to happen overnight. So maybe he just doesn't want to be on money that's not moving for a while. But there you go. That's what we got in the markets. Autumn Soul says, I bought a HIM $17 option 47 minutes ago and I'm up 1,100%. That's great. It's definitely gambling, but that's hilarious. That's incredible. Yeah, dude, the Ozempic thing is big news. Congrats to HIM shareholders. Up 30% in a day, and it looks like that is going to help and continue to help with earnings growth. All right, we'll end it off there, folks. Let's do word of the day. This is an interesting one. I've never heard of this word of the day. Hugger mugger.
Hugger mugger.
There's no, okay, there's what, 1,100 people here? I don't think anyone's ever heard of this word. Secret or clandestine? Hugger mugger. The spy communicated with her handler in a hugger mugger manner. The meeting was very hugger mugger, with everyone whispering and looking over their shoulders. Hugger mugger. Huh. Never heard of this word ever. I'm about to look at this. Hugger. It sounds like motherfucker, to be honest. That's what you hugger mugger. Ah, you hug. Wow, there's a yoga product called Hugger Mugger. Dude, there's a yoga product called Hugger. Hugger Mugger means secret. Why do they name this Hugger Mugger? Hugger Mugger yoga. This is an interesting word, dude. What is a Hugger Mugger? It's done in a secret way. Hugger Mugger Brewing Company. There's a beer company for Hugger Mugger. Why is everyone picking this name to like brand their companies? All right. Well, if you do anything in secret, you are a hugger mugger from now on. I'm gonna have to find a unique way to use this word, dude, during one of these streams. And if you weren't in the market open today, you would have no idea what I'm saying at all. So it really does sound like a euphemism for mother effer, right? Like, yeah, maybe that's the better way to say mother effer. You hugger muggers better stay off my turf. Yeah, basically that's what it sounds. That's what it sounds like. All right, guys. Thank you all for being here. Appreciate it. I'll see you guys live 3:45 on the market close, and we will keep going from there. I think Jensen Huang is talking today at around 1 p.m., so we'll have some clips of him talking at 3:45, see what he has to say. NVIDIA earnings this week. It's going to be a big one. 3:45 p.m. We'll be back for the market close. Thank you, everybody. Have a good one. See you in a few hours. Bye-bye.